China just pulled off a $7 billion move that's sending shockwaves through Washington and rattling Silicon Valley to its core. Despite years of US sanctions and export bans, China has managed to buy chip-making machines that were supposed to be off-limits. Not just any machines. Deep ultraviolet, DUV, lithography systems from ASML in the Netherlands. The very tools the US believed it had locked away. While American officials were drawing red lines and issuing threats, the Dutch were quietly delivering the goods. And now, Nvidia is in full-blown panic mode, scrambling for help and demanding sanctions, like a desperate player trying to change the rules after losing the game. The Netherlands, once seen as a dependable US ally, is no longer following the script. Yes, they blocked the cutting-edge EUV machines, but those so-called older DUV systems? They're still flowing into China, and they're powerful enough to produce 7-nanometer, even 5-nanometer chips. The kind of chips the US insisted China would never be able to make. So here's the question. Who's really winning this tech war? The US is issuing bans. China is building factories. And with each passing month, it looks less like containment and more like a strategic failure. Before we dive in, make sure you're subscribed for more deep dives into global power shifts and economic warfare. You may not have heard of ASML, but this Dutch tech firm in the quiet town of Veldhoven near Amsterdam builds the most advanced machines on Earth for making microchips, the tiny processors that power everything from smartphones and laptops to fighter jets and AI systems. These machines are so rare and sophisticated that no other company on the planet can match them. ASML's crown jewel is its extreme ultraviolet, EUV lithography machine, operating at a wavelength of 13.5 nanometers, far shorter than the older 193 nanometer DUV systems. That allows chipmakers to print much smaller, denser transistor patterns, essential for nodes at 5 nanometers, 3 nanometers, and now they are working on sub-2 nanometer chips. For perspective, TSMC's 3-nanometer A17 Pro chip in the iPhone 15 Pro packs over 19 billion transistors into a space smaller than a fingernail. In contrast, China's recent 7-nanometer breakthroughs using DUV require complex multi-patterning, which cuts efficiency and yield. EUV simplifies that process, delivering better performance, lower power consumption, and less manufacturing complexity. ASML is the only company in the world producing EUV tools, giving it a virtual monopoly. Even China's top fabs like SMIC can't manufacture true 5-nanometer or 3-nanometer chips without EUV. DUV can be pushed to 7 nanometers, but only with great effort. ASML's upcoming high-NA EUV systems, launching in 2025, will enable sub-2 nanometer fabrication, technology no other nation can access without ASML. The gap isn't just a few years, it's an entire generation. That's why ASML sits at the center of the US-China tech battle. Washington, fearing that advanced chips could fuel China's military or surveillance state, banned ASML from selling EUV systems to Chinese firms. By late 2024, ASML delivered its most advanced high-NA EUV machines, priced at $370 million apiece, exclusively to Intel. The flagship model, the TwinScan XE:5000, features a numerical aperture, NA, of 0.55, up from the previous 0.33. Other giants like TSMC and Samsung are in line, but they'll get their units later. Why? Because the US insists on being served first, even when the machines aren't made in America. So far, the Dutch government has mostly followed Washington's lead. But here's the twist. While ASML stopped EUV exports to China, it's still selling the older DUV models. They're not cutting edge, but they're good enough to produce surprisingly advanced chips, including the 7-nanometer ones that shocked the world. This decision has raised eyebrows in Washington. It's not an outright rebellion, but it definitely isn't the total compliance the US was expecting. ASML hasn't broken any rules, but it's clearly making its own judgment call about how far it's willing to go. So, what's really going on? Is this subtle resistance? or just Dutch pragmatism? A country and a company trying to balance loyalty to allies with protecting their own economic interests. Either way, the implications go far beyond the Netherlands. Because on the other side of this quiet rebellion is a China that's not just buying machines, it's playing the long game. The concern isn't just that China would use the machines, it's also that they could take them apart and figure out how to make their own versions. Given time, money, and technical know-how which China has, there's a real fear that these machines could eventually be reverse-engineered. That would erase years of Western dominance in this field and leave the US with fewer tools to slow China down. So when ASML continues selling even older DUV models to China, it's not a small decision. It's part of a much bigger picture that the US can't afford to ignore. Despite all the restrictions from the US, China is proving that it won't be held back so easily. In 2023, China's largest chipmaker, SMIC, shocked the tech world by creating a 7-nanometer chip using only older DUV machines. Experts had said this was nearly impossible without access to EUV technology, but China pulled it off anyway. The way they did it wasn't elegant. It involved workarounds, like using the same machine multiple times to do more complicated patterning. But it worked, and it showed that sanctions might slow China down, but they won't stop it. Back in 2024, China exported around $160 billion worth of semiconductors. That's more than double what it exported in 2015, when the number stood at just $62 billion. These numbers show just how far China's homegrown chipmakers have come in less than a decade. American companies that once dominated the Chinese market are now losing ground. Take Intel, for example. Back in 2015, it held about 30% of the Chinese market. By 2023, that number had dropped to just 12%, as Chinese companies like SMIC and HISILICON started filling the gap. The same thing is happening to Qualcomm. It used to have a 25% market share in China, but now it's down to 9%, with Chinese rivals like Unisoc gaining ground fast in the mobile chip space. At the same time, the Chinese government has poured more than $142 billion into its local chip industry. It's not just spending on factories, it's investing in its own versions of lithography tools, in education, in software, in the entire chip ecosystem. The US hoped that tough export rules would hold China back. Instead, they may have lit a fire under Beijing's drive for self-reliance, accelerating the very outcome Washington feared. Could the West be handing over its tech lead without even realizing it? But while China races ahead, another story is unfolding in Europe, one driven not by ideology or strategy, but by economics. Here's the other side of the coin. ASML, for all its global importance, is still a business, and China is one of its biggest customers. As of 2024, most of the sales revenue of ASML was generated in Asia, with 10.2 billion euros generated in China. That's nearly half of its total revenue. Walking away from that kind of income would be devastating in the short term. ASML employs over 30,000 people and supports a wide network of suppliers and contractors in the Netherlands and beyond. For the Dutch economy, ASML isn't just a tech company, it's a national asset. The Dutch government knows this. It also knows that bending too far to American pressure could turn the Netherlands into a follower instead of a leader. While the Dutch have blocked EUV sales as requested, many officials are now worried that blindly following Washington's orders on trade could do more harm than good. The Netherlands wants to stay close to its allies, but not at the cost of its own economic future. There's also the issue of fairness. The US is spending heavily to support its own chipmakers, like Intel and Micron, through massive subsidies and incentives. That gives American firms a competitive edge that European companies don't always have. If ASML is expected to make big sacrifices while its competitors are getting government help, the Dutch are right to ask, what's in it for us? Meanwhile, even America's most celebrated tech giants are starting to feel the consequences of this escalating chip war, none more so than Nvidia. Not long ago, Nvidia was the crown jewel of America's tech industry. In 2024, it became the most valuable company in the world, worth over $3.5 trillion. Wall Street cheered. AI was the future, and Nvidia was leading the charge. But now that dominance is cracking. Nvidia's fall didn't come from bad products or a stock market crash. It came from China. The company followed US rules and restricted its most advanced chips from reaching Chinese buyers. But those restrictions have backfired. Big time. China used to be one of Nvidia's biggest markets, accounting for 20% of its revenue. Then came the bans. Almost overnight, $5.5 billion in projected sales vanished. Nvidia didn't just lose profits, it lost access to the world's largest chip market. In response, it tried to design weaker chips tailored for China. But delays hit hard, and the market kept slipping away. Even Nvidia now warns, sales to China are going to plunge. Worse, Chinese tech giants like Huawei are developing AI processors that are rapidly catching up. Backed by billions in government investment, China is racing toward full independence from US tech, and it's making steady progress. Nvidia's own CEO, Jensen Huang, recently admitted, "The US and China are very, very close in the AI chip race." That comment alone should send shockwaves through Silicon Valley. But it's not just American tech firms under pressure. The widening US-China divide is putting America's allies in a difficult spot, especially in Europe, where loyalty is starting to come at a steep price. On paper, countries like France and Germany still back the US approach. They've backed export controls and echoed security concerns. But behind closed doors, frustration is growing. European leaders see a double standard. US companies like Intel and AMD are still finding ways, through backdoors or loopholes, to sell chips to China. Meanwhile, European firms are told to stay out completely. That imbalance is hard to swallow, especially for giants like ST Microelectronics and Infineon. Both have a major presence in China, and the market is simply too big to ignore, especially as Chinese demand surges across sectors like EVs, consumer tech, and energy systems. To Europe, this isn't just about geopolitics. It's about business, jobs, and long-term survival. And right in the middle of that storm is ASML, caught between US pressure and European pragmatism. And while the West debates over rules and alliances, China is already making its move, not with rhetoric, but with raw leverage. China is no longer just playing defense. It's hitting back hard, using one of its most powerful weapons: control over rare earth elements and critical materials essential for everything from smartphones to missiles. These materials are the backbone of modern semiconductors. And now, in response to President Trump's aggressive trade restrictions, China has begun restricting their export to the US, a move that could cripple American tech and defense sectors. In December 2024, as new US sanctions targeted Chinese tech, Beijing retaliated by banning the sale of key minerals like gallium, germanium, and antimony. These aren't just niche elements, they're vital. China controls 69% of the global rare earth supply. In fact, about 98% of gallium and 59% of germanium that the world uses come from China. Without these materials, the US faces serious trouble. This gives China significant power, and they are using that power to strike back. The impact of China's export bans is already being felt. The US military, which relies on these minerals for advanced weapons systems, could suffer delays or shortages in producing fighter jets, missiles, and other critical equipment. A single fighter jet like the F-35 requires nearly 1,000 pounds of rare earth materials, and a Navy destroyer needs over 5,000 pounds. If China continues to limit access to these materials, the US could find itself unable to meet its military needs. But it's not just the defense industry that's at risk. The entire tech sector is vulnerable. Semiconductors are used in everything, from smartphones to medical devices, and if the US can't access the raw materials to make these chips, it could lead to widespread shortages of electronics. In fact, experts warn that the US economy could lose billions if the rare earth supply chain is disrupted for even a short period. China is looking increasingly confident in this high-stakes chip war. With ASML still quietly supplying powerful lithography tools, and domestic giants like Huawei closing the gap in AI and semiconductor tech, the balance of power is shifting. What was once seen as a US-led blockade now looks more like a race, one that China might just win. So the question now is, can the US still control the future of tech? Or has it already lost that fight without realizing it? For more updates on global economies and tech warfare, make sure you're subscribed.